Hey, welcome back to another update of my Canadian Dividend Investing Portfolio Series. If you're new to the channel, what I do here is I'm just tracking my performance as an amateur Canadian investor buying and selling primarily dividend-paying stocks. I use Wealthsimple Trade as my broker. It's a really nice broker that's available for Canadians. You don't have to pay commissions on your trades, so you can buy and sell small quantities without any penalty. And I'm tracking everything that I do in this custom Google sheet that I made, which gives me a little bit more information than Wealthsimple Trade itself, which just helps me to understand exactly what's going on in my portfolio. So I'm going to try to keep it pretty short today. My stock value at this moment is sitting around $78,800 with $400 in cash. And I spent this cash on Friday, and I'll just get into that in a second with which shares that I bought. But basically, we are up about $10,000 overall. $2,000 of that has come from dividends, and the other $8,000 has come from the increase in stock price. Just to give you an idea of sort of the breakdown of where my money is actually coming from, it's actually coming more from, stock price increase than the dividends themselves. But I do buy mostly value companies, which are like big utility companies and they call them dividend aristocrats, companies that haven't missed dividend payments in a very long time and they continuously increase them. Or the name for this is like blue chip, just like very strong, growing, like very huge momentum companies that just tend to go up and up and up and also pay a dividend. So I do really track my dividend income because for me, it is passive income that is available to me if I need it. At the moment, I'm currently reinvesting all of it, but in the future, I plan to probably use some of it to live off of or fund some of my life, I suppose is a better way to put it. If I'm able to cover all of my living expenses with a dividend income, that would be great. And if not, I will plan to cover some of them. But until that moment comes, I'm just reinvesting them to get my biggest amount of compounding interest, sort of, or the dividend snowball effect, where it just really compounds over multiple years and decades. Anyways, we're looking at around $2,939 in annual dividend income, so that's super cool. Something else I like about this type of companies that I buy, which are like typically you would consider them value companies, is that they increase their dividends over time. So as their share price increases, generally over time, which most of them do in my case, they will also increase the dividend. And they'll kind of do that to keep like a sort of similar percentage. Like if a company is paying 3% dividend and the stock price goes up, they're probably going to increase their dividend at some point. So like to continue paying about 3%, because how it really works is companies pay like a dollar amount. A company will, actually, let's take a look at this. I think we can look in the portfolio tab. Let's take a look here, maybe actually in the, let's look in the Sparkline. So let's take a look at CNR here, for example. At the moment, I don't have it here. They're paying a 1.57% dividend, but really what that means is when we look here, the company CNR has committed to paying about $2.46 dividend per year per share. But if you divide that by the current stock price, which is $156, that's where you get the 1.74%. So what I was saying with all of this is basically that there's a very low chance that this number decreases as long as I don't sell my stocks. If anything, this number will continue to increase by itself as I buy more stocks, but also just as these companies just increase their dividend over time to sort of match their stock price. That's not exactly how it works, but you can kind of think of it that way, which is cool because I can rely on this. And I know that in the future, if I need to rely on it, it's probably going to be there. But anyways, it works out to about $245 per month at the moment, but I don't get paid exactly $245 per month every month. It's pretty random. Actually, sorry, it's not random. It jumps around. It's pretty predictable because these companies pay typically on 3-month or 1-month cycles. And every 3 months, I get a big payment followed by usually 2 small ones. And so that means that April here I'm expecting to be a big payment again. And because I'm constantly buying more and more stocks, I know that there's more stocks. I know I have more shares now in April than I did back in January, and so I'm expecting the highest month yet on record for me, which is going to be over $317, which is basically for sure more than the average of $244. So anyways, just a little bit of insight. If you're relying on dividend income to fund your life, be aware that not every company is paying monthly. Lots are paying quarterly, which is every 3 months. And it's going to give you a sort of uneven distribution of payments throughout the year. But if you can kind of work with that, that's cool. Or if you're just reinvesting all of it, it doesn't matter at all which months they come in, as long as it just gets reinvested and you buy more shares with it. So anyways, buying more shares, that's exactly what I did. I was in here in the portfolio tab, which if you're curious, you can pause at any point and take a look at some of the positions that I have. Right now I have them sorted from the biggest positions to the small. So you're seeing the small little positions for me down here. And my biggest ones up here, some real estate companies and utilities. I like this tab on the sheet a lot because this is where I get a lot of information and it's really quick to understand and compare between different companies. For example, I can also sort by the gain and loss, putting my biggest winners at the top, my current biggest winners, and then the biggest losers down at the bottom. I can sort by sector, stuff like that, Z to A. So if that's something that's interesting to you, you can you can use this. For example, you can take a look at the utilities. I can get an average idea of my, for example, average gain or loss. Here would be 7.95%, or I could maybe take I could maybe use this to get the average yield for utility sector, something like that. So we're looking at around 3.69%. So it's just like little information here. You can compare that and contrast that against real estate, for example. If we select all the real estate and we look at their dividends, we see that they're on average paying a much higher dividend yield, but then maybe the growth is a little bit smaller. So I like using the spreadsheet to kind of understand what's going on in my portfolio. And there's a whole bunch of different tabs in here. For example, there's a Sparkline tab, which I was looking at CN Railway, one of the stocks recently picked up actually, and I noticed here that they dropped off. And of course you can find this information on Yahoo Finance or other sources as well, but to have it right in the spreadsheet I find is pretty convenient. I've just noticed that they tanked a little bit, or they fell off a little cliff here, but they often do that. They drop every once in a while pretty significantly, but if we look at their lifetime overall trend, they're just on a very nice trajectory, as many of these value companies are. They go up and they drop off, they go up and they drop off, and those drop-offs are usually where I try to buy more shares of these companies. So anyways, I bought some shares with CNR on Friday, and this is the weekend now that I'm filming. And I also bought one share of Power Corporation of Canada. And they have a little bit of a different shape here, but they have a pretty strong dividend, 5.9%. That's very high in my opinion. But they also just dropped off recently in the last month or two. And so I don't know how far down they're going to go. They've fallen pretty far in the past. But they also like to bounce up again. So anytime they're kind of on the way down is when I start thinking I want to start buying. And I just buy one or two at a time and just slowly reduce my average price. And that's something that is totally possible when you use Wealthsimple Trade, because you don't have to pay like a $10 commission or something to buy a stock. So in this case, I bought one for about $40. And if I had paid a $10 commission, that would have been like a 25% fee, which would be ridiculous. And that would be totally unreasonable. But because I don't pay a fee, then I can just buy one or two here and there. And it's a really nice way to keep my portfolio nice and balanced. So anyways, when I'm using the spreadsheet, I do also have to track the purchases that I make. So I did buy, like I said, from CNR, and that was on April 8th, 2022. I bought two of those, and I actually paid an average price, or no, I paid a unit price on that day of $156.75. And I did not pay any trading fees, and the price of the stocks was in Canadian dollars. I also bought that one share of POW. I bought it on the same day, and I bought one, and that one cost me $38.90. And again, I didn't pay trading commissions, and that was in Canadian dollars. So the last thing that I just need to do now is just check the summary tab, and because I bought some more dividend paying stocks, my annual dividend income increased. So at the beginning of the video, this number was sitting at $2,939, and now we're sitting at $2,945. So that's an increase of about $7 per year or something like that, which is small. For most people, $7 over a year is no big deal. But every time I'm buying new stocks, this number is going up and up and up. And I've been doing this for a year and a half now, just little small deposits and payments and buying more stocks all the time. And $7 here, $7 there, and suddenly you're at almost $3,000 per year, which now is probably pretty significant to most people, I would think. And I'm going to continue doing this, throwing in a few $100s here and there all the time, and just keep on growing and growing and growing this. Until much later in my life, probably when I need the money, maybe in retirement, whatever that means these days, is when I'm probably going to start withdrawing it and spending it instead of reinvesting it. So guys, if you like this stuff, make sure you hit that like button and leave a comment down below. Let me know what your investing style is, if you're investing, or if not, what do you think it would be if you started investing? So I will see you guys down there and in the next video.